Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Here, check this out. I'll show you my setup, what I did, and what went here. So there was another red zone here, by the way. So there was another, I can't really draw it very well because if you've been around me at all, you know I don't enjoy MT4. It's an antiquated system, but there was a red zone about here or so. Now my stop loss. So what I did is when I went up, I went to the M5, did a little wedge, right? Did a little wedge. My stop loss is up here, guys. It's on top of this red zone. I like the red zones. AIRO makes life easier. Just a side note, guys. Note that if you have any questions about anything you see on the screen or any Q&A or whatnot, please put it in the Q&A section. That way I can not lose it. I will do my absolute best to monitor the chat, but there's no guarantees that I'll be able to catch everything. It's challenging to, battle these screens at once and effectively take trades. Don't know if you've ever tried it. I'm just checking real quick here. Okay. So I am good to look at any currency pair, any whatever you guys want to take a look at. So right now, officially, there was no trade here. What I did was actually, and the reason I took it on demo and not live is I wanted to take the bounce, the third bounce on this wedge. But this is actually looks like it might end up being a fake out. So we'll have to see how that plays out. But here's the wedge. This is not gonna turn up real nice because, like I said, I'm not a aficionado of the MT4 platform, but I would usually always keep it right on the wicks and whatnot. But you see, this is the news event, and it went right down into that support zone. So want to be extra cautious about that. So the market is going to open, the New York session is going to open in the next 18 minutes. So US 30 gold, I would hesitate to take any kind of trade until market kind of positions itself for the morning. So they might, who knows what it's going to do. Let's go take a quick look at some charts. So this is how I got mine set up. I like it this way. I like having two. We got the cryptos all over here. Looks like Bitcoin took a little hit here. We're down a little bit. Looks like it wanted to retrace and come back up, but it rejected right here. So nothing for the M5 on Bitcoin. Let's go check. Let's go see if we got a setup on some of the pound pairs here. GBP AUD. Let's go through the list. We got clear skies on this arrow. And look at that. It just, this is not a mistake, guys. This is not a mistake. This is actually proper price. I want to show you why you want to stay and avoid trading news. Look at this thing. This is a 1 minute candle. So in 5 minutes, it went, oh, I don't even know. Let's go check. What did it go? 63 pips. That is the monster that happened, that big news event. Red folders. That's on one, so we'll wait for something to happen. We had an AIRO on the upside, but I don't want to touch that. UG Euro pound. No arrows, no nothing. Let me see. We're going to have to sit on our hands until we get some kind of alert. If you guys do see an alert that I don't have, that does happen, let me know, and I will go take a look and see if we can have a nice little trade set up for you guys. We've got a great crowd this morning on this call, so it's always a distinct pleasure having you with us. Just a sec. Gonna take a sip of coffee while we're waiting for something to happen here. As my good trading partner would say, right here you've got a fake out. So it broke the trend line. It kind of faked you out, and then it appears like it could continue to the downside. So, but I'm comfortable. I'm fine putting my stop loss where it was. These potential support and resistance zones are pretty solid, and I'm comfortable with my odds. And that the only reason I am is because of the volume of trades. And so if you're newer and you haven't taken a whole bunch of these trades, then that's the first thing I would recommend. And get rid of the pressure of trying to trade live right away. You know, it took me, what did it take? When I first started trading, just as we're going into to the market open, all right? This market open is going to happen whenever it happens. In the next 14 minutes, I'll tell you a little bit about my little journey in Forex trading. So I started with another company. Interesting platform. First time I ever heard about Forex, the futures of trading and what it could represent for me and my family. And went in, took a trade idea from someone, a signal, I had a buy, and it was the pound yen, the dragon. Come to find out, that's what they call it, the dragon, because you can get burned pretty fast. And I was up about 30%. And then I went to bed thinking that it was going to continue in my direction, and it didn't. I ended up smoking about half my trading account in the first month of trading. And that brought me to a reality check that it's not gambling. There's a skill set to be learned and acquired, and it's not going to happen just overnight or over 1 month. There's also a mental learning curve, like the way that you handle your trades based on what the market's doing. How strict can you stick to your rules? You know, are you going to move your stop loss when it comes up here because you don't want to take a loss? Or are you going to stick with your plan because that's what you've been trading? And when it comes to trading with AIRO, this makes it a lot easier, is because I see this trend line. Okay, it's been breached a little bit, but I still see the trend line. I still see the zones. I still see that we are in a downtrend, right? I still see this big wick down here. So in all probability, it looks a lot better that we're going to go down than we are going to go up. Just the reality of the situation. You know, you'd be crazy to want to buy into this, right? You're going to have to go through this and this zone, and it's probably not going to go through there for a while. But there is a skill set, and AIRO makes it a lot easier. If I would have started trading with AIRO when I first started my Forex journey about 5 years ago, it would be a totally different game. Sorry. So let's see if we got something that we can put together here. I want you to notice also that US 30, the margin requirement, it varies on your broker. But this is $170 that is taken of your free margin just for a 0.01. So it does move very, very fast. In the blink of an eye, you can go from, well, let's say when it came down, I wasn't in this downside, but if it moves for every 10 pips is 10 cents, right? About. So you see how fast it's going. Let's go check this out real quick here. Got a great crowd on. Oh, we got a couple Q&A here. I apologize. So pound US 15. Let's go check that out, my friends. See what we got. Pound US 15. Let's bring that down here. Pound US on the 15. Yeah. So if it says a buy, then we're not doing that, right? You got a green zone here. If it was a sell, it might be a different story. We would need to see, there's no resistance zone down here. That's that news announcement, guys. Look at that. I want to show you that wick. That's that same news announcement that we saw. So you got an up arrow. You got this zone here. You got this zone here. So you got two. I think I only saw two red zones. Let's see if we can do something. Maybe we can take the trade. So this is a different type of trade, but we can potentially take the trade through the zone. If it goes through this red zone, which it probably might, actually, I like this. So what I want now is I want to see. I'm not going to be able to catch that wick, so I'm not a fan of this one. I usually don't do that, but that's news. So someone's going to send me a message and say, hey, you broke your rules. I just can't make that one fit. So let's go see at the lower time frame real quick, see what we got going on. So you got a bounce, an arrow on the 5. It pulled back a little bit. See, I wouldn't be taking. I couldn't take this buy. I couldn't take this buy. And I hope you guys can see that, why I wouldn't. It's because of this zone up here. If you do get in, if a person could get in, right, and maybe take it up here or down here, but I would more or less wait until it breaks one of these trend lines and then maybe look at another entry. Now we got some alerts coming in. Mark, you're saying, can I open my screen? You mean make it wider? It is only so wide I can do, my friends. Euro USD. Let's do it. Euro USD. Let's go check this one out quick. See if we got something. Euro USD 5. You see, I'm not seeing it. Nah. See that the problem, the situation here is this big wick that we had from the news is causing some interesting fun. So here there's no trade on my end. You're saying German 30, got an alert, GU 15. Let me see here. Great. Oh, Marcel, yeah, absolutely. Let's go over the bag strategy. So Nate put together this awesome strategy over the course of a while, and highly effective. So the way that it works, and I'll explain it just a sec here. Very quickly here. All right. I'll show you an example of the bag strategy, a proper bag strategy. We'll try and find one so that we can have an idea of what we would be looking for. So on indices, we're generally going to be trading the 5-minute. So this arrow here, that would be a bag. So first thing, you're going to want to identify the direction of trend on the time frame that you're trading. So right here, pretty evident, right? You got 1, 2, 3, 4, 5 red zones. You got 2 green zones. So that means you're going down. That German 30 is officially in a downtrend overall on the 5-minute chart. Now that doesn't mean that the 15 might be a little different, right? Here we're seeing a little different picture, but since you're trading the 5, stick to the 5. Don't go mess around with different time frames. So we're gonna go to the 5. Okay. First things first. You're gonna have to use your imagination a little bit because this is not a perfect setup. Okay. Rule number 1 is identify the trend. Rule number 2 is you need an arrow, right? Rule number 3 is you need it to bounce off of an opposing zone and then go into the direction. So here you got to bounce, an arrow, and then you can go. Now, this is a big candle. You're not going to get the alert and enter on this. This is going to hurt you right away, really fast. So say you entered here. Okay, your fill is probably going to be somewhere around here. It could take a little bit. So you'd be in some drawdown for this. Let me go check something real quick and see. If you are in this trade, the general rule of thumb on indices, so on indices specifically, what I would be doing is I would be looking for a zone that I think price won't break out of. And if it does break out of there, I want to be out of that trade. So I'm saying from a price action perspective, this one's a little bit more advanced, okay? But I would not want to see price break above this line. If price breaks above this line, I would be out of there, because the likelihood is that it continues going up, and you don't want to be in losing trades for very long. You want to exit your losers pretty fast. That's the whole point on that one. Let me go check the chat real quick. Yeah, you're right, Gavin. GU overall trend. Harrison, not so much. What's happening is like the take profit and stop loss on indices is different, right? Like you see, this is 252 pips. Okay. On Forex, this would scare the snot out of you, right? But on an index, on US 30, that's just expected, because my stop loss is over here, which means that it's like, let's go blow this up again so that you guys can see really clearly. When you're using US 30 is the big boy, so don't, generally it's not advisable, even though we don't do advice, but I mean, that's 700 pips. That's my stop loss on this one. 700 pips, which is like $75, right? So I'm willing to take $75 loss on this trade on the US 30. I didn't actually put a take profit on this, but I'll show you where I would exit. Let me show you something with Bollinger Bands. I don't know if I'll be able to do it properly. I'm gonna keep it specifically MT4 today. Try and do that for you guys, but indicators. Let's do Bollinger Bands. Where are you at? There's a specific way. Fibonacci, linear regression, Gann, arrows, Andrews. I don't even know where to find it. Oh, it's in indicators. Right. Bands. Let's try this. US 30 is more volatile than German 30. German 30 is more friendly. I don't know if this is Bollinger Bands. We're about to find out. Yeah, it is. Okay, so I actually use a standard deviation of 3, and I use a period of 34, and I'll show you why, and you're going to see it right away. Did a little bit of practicing, a little bit of playing, okay? So you see this bounce here? You see, like when you get a 3 standard deviation move away from the middle line here, you then have a high probability to go to the other end. Okay. And since we're in a downtrend, when you get a bounce off, it's not always going to work on the on this, but when it does happen, it's actually really nice. So let's go down. This is not bag, by the way, but it's just another way to kind of see what a person can do here. Hold on here. See all this? So I am just watching, because you see you have a high, a lower high, and a lower high. See these big wicks? That's interesting. We're going to wait on that. Yeah, German 30 is much more, let's just say it's much more friendlier. M15. All right, hold on a sec. I just got another question here. I'm just going through the chat real quick. Euro US was a bag, and I just made $1,000. Gary, fantastic. Glad for you, man. That's awesome. That's awesome. Euro US. On what time frame? time frame was that Euro US bag? Now, notice that I use the monthly chart for my AIRO setup. Oh, okay. Okay, you did a 1 minute Euro US. I want to go see this trade. Okay. Oh, I don't trade the one on. Okay, I see it. Well done. Well done. That's a lot of movement. That's a lot of movement. But you took it short? Yeah, that's great. The reason, Ernest, I use the monthly setup is because I won't close the monthly chart because I don't trade the monthly chart. So as you can see, we're at 380 pips in the red on this one, and that's just, it's coming back up and challenging that. Should have been more careful. I was in the profit. I got 500 pips. Like I said, just trading the plan. If I do get stopped out, you see my stops out here. Here's another potential learning opportunity. This trend line now, because it's been breached, as it like that. How do you guys just trying to move it? Just slip it up here a little bit. Here, I'll show you a couple of the things that I use on. Sorry, guys, just have to check another computer here. M15, Garvin. M15. Okay. M15 on the GU. Let's go see. Okay. All right. Look at this. We've got a AIRO. We got a bounce. AIRO. Let's go see what we got going on here. This would be a counter trend move, right? On these counter trend moves, if I'm going to take it, I'm going to take it for a handful of pips. I'm not going to go the full. So on the standard Forex currency pairs, you're going to look at anywhere from 20 pip take profit and 40 pip stop loss is the general start area. And on a counter trend trade, I'll only take half of that. Raj. Oh, that's a good one, Chris. I like that. Okay, I'll pay attention to that. So Raj, let's do that. Let's go look on the gold. This is taking a little bit of heat. My stop's still up here. You see 600 and some odd pips. Remember what I said about Bollinger Bands and the 3 standard deviation? That's a pretty big. We'll see what happens here. See if that trend line holds. 5 minute bag. Yeah, that's good. Check this out. Bounce, arrow, and then we're going down. So for me, I'm just looking. Overall, we're right into that zone. So if you wanted to take a part of this, then that should be fine. You know, we're filling this gap here. So we're officially counter trend though. So I'm not liking that part of it. Down, down, down. Let's go see what we got here. Let's go see what we got. Jolando, you got your hand up. Is there something, a question you got? I'm just looking up on another screen I have here. Yeah, right now I can't take that. And the only reason I can't take it is just because we're going counter trend. It could blow right through here. It could blow through this zone, and I'm too far away from a zone to put a stop down here if I was to look at long. And up here, that's where my stop would be, is up here. So that's pretty far away from me. Oh, Jolando, that's a great question. Let's do that. So this is a demo account, by the way, guys. So here's that US 30 trade. You see it hit my trend line where I readjusted it. I'm going to go down to the 1 minute for my exit, and I'm going to explain to you what I'm looking for my exit, okay? So as soon as we get here, I'm exiting. As soon as we get some kind of pressure. If it doesn't close below. So candle close. Boom. That's where I exit. And if it keeps on going down, great. Doesn't matter to me. I'll take whatever the market gives me. Give me a minute. I'm just going to mute myself. All right, good stuff. Ready to go again. I just have my seasonal allergies are really bad. Remember, put all your questions and stuff in the Q&A section. That way I won't lose them. So Jolando, let's how do you take it? How do you set it automatically? So in these scenarios, I like to use the one-click trading, okay? Makes my life a lot easier. Let's see if we can find another setup. Maybe that one doesn't really count because I took it in the other session, the Hawkeye session that happened right before that. So here's our GU trade that was, you see we had that pullback. So here's your arrow, here's your bounce, and here's that pullback. So potentially could be a better entry here than down there. Let's go see if we can make this trade happen. Are we, I forget if we're in an uptrend or a downtrend. Yeah, we're in an uptrend. So not taking this, not with that much upward pressure. And there's no bounce here. Let's see if there's a bounce on the, yeah, there was here. Okay. So on the 15, there's a bounce, but it's counter trend. And so I'm not sitting in this kind of a trade. If I was to take it, my stop would be right here, and I would take it for a couple pips. I would just put it right on the other side of this line at this here, and I just take it. But I don't have appetite to take that one. The pound yen short, GBP USD short. Not at this moment. US 30 on the 15. Well, indices, I don't trade on the 15. I traded on the 5. But let's go see. Let's go see. Maybe we'll have something. So here's a bounce. Here's your arrow. That's your go. US 30 for a short on a 15. But you need to cover. You need to be able to cover this area, and preferably this area, right? And you need to understand there's this zone down here. So now we're at the top of the zone, so it's not too bad. But this is not a trade you can take with $1,000 account, because you'd be way over risking. Your risk to reward here would be good, right? Remember, there's a reason we do M5. Let's go check this out real quick. What do we got? So I don't like this. This is the wedge that I see. What I'll do is I'll bring it up on my other charting platform. I use TradingView for, well, all of my markups with the I just got a notification that I was muted. I'm not muted, am I? Okay, good. One of the systems is being weird. Would you have taken USD Swiss on the 30? Well, let's go check real quick, and then I will go and finish explaining how to automatically set your stop loss and take profit. You know what? Let's do this. How about that? Not on this. Let's do currency pair. GU short. Let's open this up. Let's say prices, that's not bad. That's not a bad stop. It's going to be a little bigger than what I like. So let's attack this first. I got another question to deal with. So one click trading, I hit that. I'll do my position size. I've got a calculator for this size. So basically your stop is going to be your risk in the trade. Bigger your risk, the bigger your stop, the less you can put into your, the less size of, the less lots you can put in the trade. So in this scenario, I am going to put 8, 7, just because it's a bigger stop than I'm used to. And then right here, when you right click modify, now MT4, this is 20 pips. This is 200 points. So my stop is actually going to be, I'm going to start it at 400 and then I'm going to adjust it based on what I see. And then we're going to go for 200 points, which is the 20 pips. Okay. This is not, I'm just putting it here. So here, I'm going to have to bring my my stop loss up a little bit more because I'm not covering. See, I need to cover this zone to be safer. Now, if a person wants to lower their risk, they could potentially bring it down here. Reality is, though, is that you're going to get stopped out more often here than you will bringing it up to this swing. It's just that you can have better risk to reward. So what we do is we just we wait for it to play out. And that's how you set your take profit and stop loss really fast. You just right click, modify, and literally takes about a minute, and then 400, 200, and then put it at whatever swing you feel comfortable at. You're going to get stopped out more often here than you will there, but here you're going to make more profit or lower your risk in the trade from taking that entry. So totally up to a person how they want to play the game and how they feel like trading. And that's where demo trading comes into play. It's a great place for you to hone your skills and find out what is comfortable for you, because you're learning a skill set, right? And if you make money along the way, great. What I did after I took that big loss from my live trading account, I took back and I went to demo, and I stayed demo for like a full year. And I found a great mentor. I had guidance, and I followed his advice. And after a while, I finally got to a point that I was consistently profitable in my demo account. So then I went live. And so that was my path. And it was really important to understand that it's okay to take steps back so that you can move forward with more confidence. I was talking to Joshua Fair not that long ago, actually yesterday, and he was talking about the good old spider monkey. And spider monkeys have a very, very strong tail, but what they do is they pull themselves back. They swing their entire bodies back so that they can move forward with authority and strength. And sometimes if you get hurt in the Forex market, which does happen, the vast majority of people do end up losing money at least once or twice. It's the reality of what we're doing. You're not always going to win. But when you do lose, don't let it affect your mental state. And don't, some of the lessons some of the biggest losses I've taken was revenge trading. So trading after I've taken one loss or two losses in a row is where I get myself in trouble. Because you can wipe away 2 weeks worth of gains in one stupid trade, just because you change your mind or whatever your setup is. And that's where AIRO comes into play, is that it's so elementary. It's as simple as trading can get. In my view, I haven't seen anything that makes trading so simple. There are situations that it just doesn't work, and you're just looking for the right setup. When it does happen, then great. If the right setup doesn't come, don't pull the trigger, right? Don't get into bad trades just because you want to take a trade. If you, and this is where I'm kind of contrarian with certain people, is that if you want to experiment, continue experimenting in your demo trades. Don't worry about having to make your monthly subscription fee the first month or the second month or the third month. You're learning a skill. People, I have a friend of mine that spent tens of thousands of dollars to learn to trade. And I haven't spent tens of thousands. I spent maybe maybe $7,000 or $8,000 over the course of the last 5 years with different memberships and accesses and programs and whatnot, and meetings and conventions. It's been a longer journey than what I had anticipated when I first started taking a look at the Forex market. But I can tell you, it's worth it. And you can't get discouraged when things don't work out the way you think they are. It's a real skill set that you're learning. You're also learning how to control your emotions. Humans are in nature, by nature, just very, very emotional people, very emotional beings. So trading is not for everyone. But if it is for them, the best way to know if it's for them is to use AIRO. It's going to make analyzing the charts a lot easier for most people. And the only reason I'm talking so much today is because I didn't see very many alerts, and I'm watching the chat so much to see if we got any Q&A or stuff. But it's a journey. So don't get discouraged when you don't figure it out the first month. Oh, Bren, my friend, let's do that again. What are you saying yours is not the same? So let's check this out. Oh, actually, so yours is different. Because this is a counter trend trade, I'm only going half my take profit. Lower probability trade. I would have actually hit take profit earlier, but I was busy talking. Yeah, you have to click modify. So right click. You have to first execute the trade, and pretty much as soon as you execute it, and then you modify it, you do that. I hope that helps. Anyone else disconnected from their VPS? Interesting. What do you mean lost picture? Oh, hello. You weren't supposed to go in there. Hey, here's another great learning opportunity. If for any reason you accidentally put a trade that you didn't want to, get out of it as fast as you can. Oh, yeah, my screens, yeah, because my VPS died, so it disconnected, and I had to reconnect. So that's why you didn't see my screen. I just needed need a drink of drink of coffee. I was I got the hiccups this morning. Perfect. Naz. Now we got something maybe we can play with. What do we got? Naz 100. Naz moves a little slower than our buddy US 30. US 500 moves differently as well than Naz 100 and US 30. But US 30 is, they call it Dirty 30, but it's a monster. It's a monster. So if you're going to mess around with the indices, don't mess around with them unless you've taken like 100 demo trades. Oh, all right. Yeah, let's do that. While you're waiting on alerts, can you do the technicals on GCAD? All right, for that, I am going to do TradingView. Okay. I'm going to clean up my screen a lot because I don't want to confuse anyone. But as you can tell, oh, that's interesting. I know I should have taken that long when I wrote this up. What's this? See, that's that wedge break. It kind of pulled out and continued to consolidate, but it ended up right there at the take profit. So it's probably going to end up, CAD yen is going to end up probably bouncing on this line. Let me see what was the question again? GCAD. GBP CAD. Let's blow this up. Oh, not that. So all right. So this is like, I forget the exact technical term of this right here, and someone can correct me, please. But I believe it's called double top. Okay, where it comes up, forms a top, and then comes down, and then comes up higher, and makes a top, and then turns around. So if you're in, this is more or less my barrier line that I would be drawing. If it was going to continue up, then it would have continued up here, and I'll show you what happened. So we're going to do Fibonacci from the beginning of the run till the top of the run, okay? So now sorry. So if we were over here first, okay, we're going to start here. We had a 23.6 retracement, which means it's going to continue up. Okay, 23.6. Now we're going to be in an interesting predicament. I'm going to go up here. I put it on the wick. Some people put it on the bodies. I like to be a bit more specific. Okay, so now we're looking at the retracement levels. Highly probable. Now we just broke the 38.2, which means that we're probably going to continue down to at least 50 or 61.8. At least the 50. Okay. So this is probably what's going to end up happening. Now, what makes me also believe that it's going to continue down is this Bollinger Band hit here. When these are flat like this, and you get a hit, and then it breaks below this this median line. This I forget the proper mathematical term, but this the line in the middle of the Bollinger Bands. Then it's going to continue down until it hits the other Bollinger Band. Now we're probably going to get some sideways motion. It might come up again a little bit, but I don't know if it's going to break this trend line here. Okay. I don't know if it's going to break that trend line. Now, not to make things too messy, I just want to do this real quick and kind of show you what I see here. Let's realistically put it here, right? So you got one bounce, two bounce, I call that more two, and then three bounces and it breaks. So let's have an idea. Probably about midway through the wedge, you can put a stick, and you put the stick here. So it's going to go this far very frequently, probably about like over 70% of the time. It's going to go the length of the stick. When you have a wedge with multiple hits, 1, 2, 3, and then 1, 2, 3, 4, whatever. And then when it breaks the wedge, it's going to go. So here's a scenario. 50% your next target. After that, you're looking at 61.8. So in all reality, 1.70 is probably going to be hit. And then it could go down to 1.6970. So another 30 pips beyond there. Just to give you an idea where that could go. And that's only on the 15-minute chart. So, but like I said, could be wrong. But I'll show you one more thing with the price action. So why I think this is a potential area that it could go to. A couple reasons for that. Price actually knows about the middle. I generally do about the middle of the wedge. Here, I'll get this out of here. So you see this? See this big wick that comes down, challenges it? This is where I see price coming and then consolidating a little bit because it's consolidated in the past in this area, in between this area. So price has memory, and price is not random. Doesn't matter what anyone says, price is not random. One of my mentors always says that Fibonacci rules the charts, and if you saw some of the stuff that he was able to do with Fibonacci, it would blow your mind. Blow your mind. So let's do it this way. Let's take a quick look here. So here's your wedge, okay? Someone asked about where to draw your stick. This is a better wedge, okay? Here's your flat top wedge, 1, 2 hits, okay? Not 3, but you're above your Bollinger Band, okay? And then you take it till you start seeing a big pullback. Like me, I would be out of it probably at this candle. I'd be happy with that. I'd walk away. So here's where we're going to do our stick. So we're going to go from the first hit, probably the middle of the wedge is a good target, till the top of the wedge. That's generally where I like to go. And that's exactly where that pullback that I said I would exit at. You see that air, if I drew a straight flat line here, you'll see where all those wicks are and where it's challenging this exact line. Oh, guys, this is awesome. Check this out. I'll show you something. This is awesome. Hold on. Right about here. Okay, I'm going to show you. Get ready. Make sure you're sitting down. So where this target was is the exact same place where it broke and I would be taking a trade. I'm not taking a trade at the first break because it can come back in. You don't want this drawdown. You're going to take it at the rejection of this in your wedge if you were to take this. You see how price, look, go left. See, look, the same thing here. Price knows exactly where this blue line is. Price knows exactly where this blue line is, hands down. And let me show you what I mean. This blue line is not just random. It's not going to be that. It's the 20. It ends up being right on the 23.6 level of this run. And it doesn't matter how far back you go. Hold on. Let me go back a little bit. You can see how price continues to bounce off of this single level. I didn't adjust this. It's here it gets a little messy because that's way back. But anyway, exciting things. Let's go check some more charts. Here, give me a sec. I'm just going to mute myself again. Absolutely. So, got a question in the Q&A. It's a great question. Can you use wedges for any time frames? You absolutely can. You absolutely can. And this is how you can, here, you're going to get me all excited because I love wedges and I love showing people things that they sometimes think are, well, impossible. Check this out. I'll show you. Hold on. Let's go to a random currency pair. Someone pick a currency pair. Yeah, NAS 100. Let's go. NAS 100 as indices. All right, US 100 on. Let's go check this out. Oh, we got, it's melting. So let me, hold on, my friends. I need to find out if we can get in there. Want to kind of make you guys a little bit of money here. AIRO bounce. This would have been a trade, but you see how big that candle is. You would have been in some heat. on NAS, we're in a downtrend. Excuse me. So there's a couple scenarios that you can do if you wanted to enter this. One, wait for the second arrow. I don't like second arrows generally, and I'll only take half take profit. Or you can, because we're on an indices, on an index, it moves so fast that you can sometimes take the counter trend trade outside of the counter trend area or counter trend time frame. But wedges can be done on every time frame, and I'll show you exactly what I mean on NAS. So for the sake of reference, we'll start at let's do daily. How about that? And I'm going to get rid of all my indicators and stuff. Here, we'll make it real clean. Okay. So here, this is a daily wedge. Okay. I'm going to show you kind of how this can sometimes play out. And sometimes you want to extend your trend lines out a little bit. It looks like it's breaking all this, but remember, this is on the daily time frame. So you would go somewhere like the middle of the wedge and draw the stick and put it here. And then you're basically, like I said, the stick is going to get you there very often. And it works on every time frame. This is daily. So let's adjust this wedge now. I'm going to show you another wedge. Okay, this is another wedge. This is a bigger wedge. What am I going to do here? I'm going to go from the middle to the top, and potentially I'm going to leave this here, and then next week give you guys an update. How about that? If in fact it does that. Now you've seen me draw a couple wedges. You've seen how it comes in, it comes out, it challenges, and then takes off. Well, that might be what's happening here. So let's go do GU. 1 hour sell. Let's wait a bit then, because that's a swing trade, and I just want to continue on this thought process. So here's 4 hour chart, right? I'm going to show you something really interesting, so get ready. This is a 4 hour chart. You see something here. You might see something here. So I'm going to change the color of this line, okay, so that we don't overlap too much. Yeah, that's fine. So I'll show you how powerful wedges can get when you start marrying the time frames together, and you use the wicks. Okay, use wicks, please, please, please use wicks. There's a reason you use wicks, and I'm going to show you exactly. I don't know if you guys are going to appreciate this as much as I do, but check this. So wick, 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 and then reject. Okay. So we're going to do it again. Check this out. We're on the 30-minute. This was the 4 hour. Okay. We're going to blow your mind. Maybe this is too much for some people that are newer. That's fine. But I just want to show you where you can use wedges, right? So we're going to change this one to this real quick, and then we'll get through to something else. All right, so this is a little tiny wedge. It looks like a little tiny wedge, right? Remember the color that I'm using. Little tiny wedge, okay? It's all intersecting at this same break point. And we're going from kind of the middle of the wedge. You could draw this a couple ways. Right there is where you start getting that rejection. So you could actually draw this wedge this way, or you could have drawn it this way. In the end, it's not a huge deal, not a deal breaker. It's just going to make this target a little bit smaller, and I like this wedge better. So here, okay. Reality is, that's where you get your first challenge. Check this out. This is 106 pips. That little wedge here. All right, follow me one more time. We're gonna speed this up a little bit because I think I'm gonna lose some people really fast, just because some people don't like the over technical nature that. All right, we got a wedge inside of a wedge inside of a wedge, and someone asked a question about, can you use this on all time frames, or is it only a specific time frame that you're going to want to do this at? And my clear answer to you is, if you learn to trade wedges on the 1 minute chart, okay, it's not always going to be this cut and dry. This is after the fact. Okay, so don't, but you see these wedge formations, they're all over the place. So now when we look way back at the daily snapshot of what we were looking at, you see how you could take this trade on a lower time frame using wedges and using AIRO as a confirmation. So let's go from there. GU, let's do that. Let's go GU. All right, so out of the gate, you're saying buy, but I got no bounce. Right? Is that what oh, potential sell. Sorry. I didn't see a sell. I didn't see a sell arrow. So if you're saying, see, I'm not going to take a trade before I see the arrow form, because I need that bounce on this zone. I need the arrow to form here. It might give us an arrow to the downside. If it does, interesting. This will be a trade that could last all week before it hits its take profit. Oh, yeah. No, absolutely. You're totally right. Yes. Thanks for clarifying. Yeah, it's looking like you could potentially get a sell set up here. Let's do GU real quick. Let me see if we can do something. GU. All right. So first things first, we go from the origination of the move. This is on the daily chart, by the way, so that's a 23.6% retracement from that original high here. So I'm going to go down to the, when I go down and I do swing setups, I don't do generally a lot of swing setups. I'm not that patient. Okay. So here's your hourly look, right? Here's your top. I don't know. It looks like a W to me, but M's and W's I need to go do some more research on. Oh, I'm sorry, Danielle. It might be my internet connection. We have some crazy weather going on right now. Is anyone else having problems with audio? Or is it just a Danielle problem? Yeah, because I didn't. I usually get a notification on my computer when my network is really slow, and I'm not getting that now. I had problems earlier in the session, earlier in the morning there. So let's take a quick look here. This is GU on the 1 hour. If a person was to go short, I would be looking at this as a target. Okay. Generally, at least 2. I love to have 3. This is a strong bottom here. Okay. So 2 points at least, because you need to make a trend line. And then I want 3 at least, and that's a stronger wedge for me. So if a person wants to put their stop loss and they want to take this trade, they're generally going to want to try to get as close to this trend line as you can. There will be a red zone here from an AIRO perspective. You're going to see it, right? You see it on my other screen. That's your red zone, your red little box. That's your, so you kind of want to be as close as you can to this box. For me, I'm going to put it just above here. You know, if I was to take this 1416 around there, if it challenges this for any reason, I don't want to be in that trade anyway, because I don't want to be in some kind of miserable trade. So right now it's, if it does break here, it would be a lower time frame entry for me. This is too big of a stop for me for this. This risk to reward is not. It doesn't fit in my trading style. It is for someone that that can't stay on often. That doesn't have a lot of time to trade and just wants to take a swing trade. That could be potentially a good setup. But you need to understand, if it does come up here, you probably want to be out of that trade, because we are in an uptrend, right? We are in an uptrend. So the end of this stick, just for giggles, let's find out where it's going to end. So 38.2, that would be a pretty good retracement. So this is how I use the stick. I put Fibonacci. I try to have an idea of like the origination of the move is down here. And I go up here. 38.2 to the pip on the stick. If you want a more conservative target, you just bring it up a little bit. And then you put your take profit here. That way, well, we're breaking down, or at least it might seem that way. Now let's add one more layer to this, just as someone mentioned about the GU on the 1 hour. Let's add the Bollinger Bands to this. Now, this is maybe not set specifically for this time frame, or not tuned very well for this time frame, but based on what I see here, that is a pretty good short. That might be a good short. Maybe not a very long trade, but at least a couple pips. You see how the Bollinger Bands made lower highs in the Bollinger Bands and then lower high, and now you got a lower low. A little bit different, right? This is what I'm looking at. This is not forecasting, by the way. This is just where price could potentially go. Remember, we did the write-up. We said this is going to be 38.2. Retracement. There was already some action here, right? They'd already retraced here. So I'm probably going to want to exit before it gets down there. I hope that kind of gives a little bit of guidance to someone that wants to take a different look at things. All right. My trading partner is here. I'll bring him in. If he wants to talk, great. If he doesn't, then no worries. No worries at all. I don't know how long he's been in attendance, but so this is what I have on GU. Kind of did a little bit of that. Love wedges. NZD JPY 15. So this is an Asian session pair, so probably not going to want to play around too much. It still has some room. It can still move about 10 pips before the end of the day. You see the ADR, average daily range, and how you use this over the course of the last 20 days. I changed it to 20. It's 65 pips, and it's moved 57. So there might still be an opportunity here. NZD JPY. So let's identify the trend. So by using AIRO, all we do is so the immediate trend is down. We're in a downtrend. That's what I like. That's fine. Now we're going to do Fibonacci retracement from the origination of the move to the top to get an idea of what's going. Greg, if you're having a hard time seeing wedges, that's completely fine. I've drawn thousands. It's taken more than a couple days to see wedges all over the place. Just draw them. Just practice. Practice. There is a wedge and triangle finder tool on TradingView, so you can customize that however you want. And it's not 100%. I can draw better ones than what come up with it, but at least it gives you an idea. All you're looking for, this is how I look at wedges, okay? Let's go NZD JPY just for the heck of it. NZD JPY. Okay. So here, NZD JPY. We're going to look for highs and lows, okay? So just for the sake of all of us, let's do it this way. The first thing I'm going to do is I'm going to find my first trend line. This is a big trend line. That's a little big. So if you want to practice drawing wedges, what you do is you find the top and the bottom of a price channel. And then you can kind of, you might be able to start seeing them, right? You might see this, but kind of divide the chart up a little bit. So you can put it there. I like doing the closest low. I don't like going down there because I just feel that as a different swing. And then you might be able to find this, right? Officially, the wedge that I'm drawing on this one is actually from here to there, but I want this connection because it brings validity to this trend line. Now, because price broke below this trend line that was here, then you may have, here, check this out. I'll show you what on a small wedge like this, you can put kind of the stick in the middle and then you go there. And most of the time, now this is the news announcement, so this is going to be a problem. We had this major news announcement that sent the market into uproar. But if you're having trouble seeing wedges, all you have to do is, and this is how I learned, is I just drew them. So I drew my channel, and then I started looking for the wedges. I started seeing them. And once you see the wedge, it'll just become kind of second nature. So it takes practice, right? It's not going to come, you never came out of mama's womb drawing wedges and triangles or trend lines. Just make sure for my sanity, make sure that you're using the wicks. I'm a real stickler for that. See, this is a bigger wedge. This wedge here is this to that. And just so people can follow, okay, I'm going to get rid of that. All right, that's kind of the bigger wedge that I have. It's not an amazing wedge. Okay, it's not an amazing wedge. But I want to do something. Then you have something there where that break is. So it's gold is pushing down on the 5-minute window. Well, let's go see. Let's go see what we got. I am only going to have another hour. I need to be out of here at 11:30. I have another appointment I got to get to. So let's go to gold. So as I had mentioned before, my setup is I got 2 different charts, and I'm using the monthly. The reason I use monthly is because I'm not going to close the monthly. I don't trade the monthly, so I wouldn't have it open. I don't even swing trade. I just take whatever the market gives me. I'm not patient enough for that. Now, one of my good trading partners, he's a swing trader. He'll sit in trades for months at a time. But I can't. Let's go check. Did we say 5-minute? Let's go check. Yeah, see, this there's too much. This is too much for me. I don't like this. I really don't like this. Let me go zoom that in so that you can see why I don't like this. So here's that second arrow. It's good. It's just I got here too late to potentially take this. There is a pretty straightforward way of taking this trade though. So here's that. Here's that kind of trend line wedge situation, right? So if I was in here, this is a valid bounce arrow go, okay? Second arrow is still valid. Here's your bounce. Here's your arrow. Here's your second arrow. depending on how a person wants to play with it. My stop loss in here is actually going to be on top of this high, right? Because if it goes somewhere, let me see here if I can adjust that a little bit. This is still really far away. This would be a very, very safe target. You don't want to go all the way up here, okay? You don't want to be way up there. You also don't want to be chasing this trade because you don't know when it's going to pull back. If it does come back up and challenge this trend line, that would be a good entry. So from a gold perspective, now that we saw AIRO, let's clean this up a little bit, go to gold. This is too much activity for me to trade gold with. I don't have, you see these big candles? I don't like that. I like controlled candles. Oh, you did 30 pips. Nice, Demetrius. Great stuff. So yes, the trend so Jessica, I'm going to play devil's advocate here. You say trend is bullish, yes, but on what time frame is it bullish? Right now it's 31 hours going to be in an uptrend, but is the daily in an uptrend? Daily's in a downtrend, right? So we have to be very careful about what we're talking about when we say, oh, actually, guys, we might be in yeah. So check this price channel out. This is a daily gold price channel. We're at the top of the channel. So I would be cautious about taking any buys here. I would be only looking for shorts because more likely it's going to be coming back down into this channel. So let's switch time frames again. That's that. See that funky business here? Now it's starting to make more sense because it's the top of this channel. When I'm looking at this, this is what I see. Someone else could see something else. I like these big wicks when I'm doing wedges, right? So this is our playground, as my good friend would like to say. Our playground is between here and here. There is a lot of money to be made between these two zones. I mean, that's 200 pips. But I'm not going to be playing this game of sell the top, buy the bottom, sell the top, buy the bottom until it breaks, because then you're gonna potentially get stuck with your pants down. Because when it's eventually going to break out of this wedge formation, it's gonna break out eventually. Here, one more trick. So I'm going to call this I'm not calling this a hit, by the way. I'm just you can use Fibbo time zone. This may not work. Sometimes it does. It doesn't always. So this is a 75% mark of the Fibbo time zone. Generally, you bring this to the end of where both trend lines can intersect, and it's going to break out before it gets to this zone. So it's kind of like a timer. It doesn't always work. Sometimes it works. But you know, just another thing you can throw into your trading repertoire. We can be in consolidation. Tighter it gets wound, well, the rest of the day is probably just going to be consolidation anyway. But you see, I would want to be selling the top and buying the bottom. And here's that. Things got really loud upstairs. I'm going to apologize for that. I don't know if you guys can hear that. Let's see if we got let's lock this down. How about that? What's Nas doing? Nas just melted, right? So this was the only Nas trade on the one could have got USD CAD on the 5. What do we got? A buy. So we'll take a quick look, see the trend. We're counter trend, right? We'd be going into that. It is a valid bounce arrow go. It's just counter trend. If a person wants to take it, they could potentially take it to up to here, but they'd have to put their stop down here. So the risk to reward would be kind of 1-to-1. I would get out of the trade at like 17 pips, but you're going counter trend. So what's this here? USD CAD. Let's go check real quick, see what we got. USD CAD. I'll show you on here. I'm much more comfortable. On trading view. As I look at this, I wouldn't take a buy in this kind of movement. If I was, my exit would be like somewhere here. I would want like that to be my exit. But this is not a trade I'm prepared to take. Doesn't fit my modus operandi, my trading plan. I don't like going counter trend. Yes, Lial. Yeah, it will be available for later. There is a recording. All of these sessions are recorded and they are posted. So you'd be able to see that again. See these big wicks cause me problems, okay? And just to show you what a regular Forex day would look like, take a look at your average, your regular moves during the day, right? This is your 9 o'clock market open, boom, down, right? This is some crazy news announcement of some type. But this is what I like. This is what I like. This is what I like. All consolidation, this, tops, bottoms. This, I don't like. I don't like these big, see this? Do you see how the announcement that just happened really, it makes me not want to play ball at all. This is kind of the time when I see this kind of stuff, I put the toys down and I walk away. Because this is what I like. I like to have this kind of uniformity. I don't like these crazy big candles. These crazy big candles like this, I don't like either. This is too much for me. And this is what's going to make sense. These big candles mean that your stop has to be on the other side of this candle. So what this one did is it reached back, it got all the stops that were here, all the stops that were here, and all the stops that were here. You see what I mean? And it just about challenged this top here. In reality, it was so close. You could have got, depending on your broker spread or whatnot, you could have got stopped out too. So this says put the toys down, walk away, go drink some coffee, do something. But for me, that's because there's no point gambling, right? Look at this. This is the U.S. Swiss. Look at this thing. Same story, a little different perspective. We're now up to this. We're now challenging this high. If you want to see wedges, all you do is pick a time frame. Do it on 5. 5-minute wedges are actually pretty easy. There's a lot of them. They're all over the place. And all you have to do is find the top and the bottom of the price channel, kind of like this. And this way, it helps you focus your attention to identify the wedges, right? And then there's a little bit more advanced wedges that you can find, like this one here. Okay, this is a little bit harder to see because now you're going over a time frame. This is still and I'll show you something too. So this would be like a 15-minute wedge. And then here you see where it challenges that and then comes back up. Boom. Where did it stop? At the stick. When you started getting some heat, it's going to hit this stick like 65-70% of the time. So I hope that kind of brings a little bit of clarity. I'll be honest with you guys, I'm probably not going to take another trade today because of this scenario here. This makes me want to put the toys down and walk away. I hope you guys got some value out of this. Maybe shows you where trend lines and how you can use trend lines and a combination of Fibonacci retracements and whatnot to lock in some extra pips and stay in trades longer, or get out of bad trades faster, or tighten up your spread. I actually don't want to continue too long because I really value all your time, and at this point it's just really slow. It's just really slow. But if anyone does do a wedge markup, or you want me to take a look at some of the wedges that you draw on or some of the trade setups, just let me know. You can find me in the AIRO bag chat, and you can tune in to the Hawkeye channel every morning. One of my good trading partners, he's been trading for 20 some years. He's live every morning from 7:30 till about 9, right before this session. And he brings a little different spin on trading. And I've learned so much from him. He's just a tremendous asset to the company. So, oh, Noah, you're fine. Or Katarina. Oh, Danielle. Yes. The link. Let me let me make sure that we get that updated so that people can actually like legitimately join our morning sessions, or because we do it Monday through to Friday. We do it every day. And Al just brings so much value. And maybe there's a little something that you'll pick up from him that you can apply to your trading to really increase your odds. Stack the probabilities in your favor is all we're trying to do, right? So I hope all these trend lines and stuff don't confuse people. If you're brand new, don't worry, guys. Just use bag 15, 5. If you can't sit on the charts and monitor things, go to the 1 hour. Take the 1 hour bag entries. There's not as many, of course, but when they do happen, they're pretty nice. I know Jackie, at one time, she was only trading Forex on the 1 hour. She wasn't doing any of the lower time frames. She'll do lower time frames for some other stuff, but not the Forex. You see, this is so in here, your risk to reward is going to be different. You're not going to be using a 10 or 20 pip stop loss. You're going to be stopping up here and you're going to go for this run if you do the 1 hour trade setups. Excuse me. So, for example, if you did catch this alert, if you got this alert here, and so you'd have to use 50, almost a 60 pip stop loss. You could take it to here, about a 50 pip stop loss or so. This zone was probably already there because it was established over here. So 50 pip stop loss. And then the first time you get some real heat would have been on this candle. So even if you exited here, your risk to reward is about the same. So if you risk 2%, then you could have made 1% of your trading account in this trade. Difference between this session and the session that's before. So this session, it kind of varies based on who's teaching it. We still focus on AIRO, but Jackie does the Tuesdays, and she wasn't able to make this Tuesday, I believe, because she was moving. So that was a no-go. But Jackie does a lot of stuff with indices and stocks, but she uses AIRO for that. Myself, I like to incorporate a lot of wedges into my trading, a lot of wedges and trend lines, because that's what I found when I started using them. I had much more consistency. I'll use Fibonacci retracements, Swiss yen. I'll show you. It's because I can kind of see Swiss yen here. Check this out. Here's the 5. Blow this up. Let's go 15. How about that? So Fibos rule the charts. They always do. Always do. So 50 to 61.8 is where you're going to look for your pullback. You know, that's why you don't want to chase a trade, because you're going to get that pullback eventually. You don't want to buy high, right? You want to sell high. So that's where AIRO kind of makes life a little easier. Excuse me, my voice is getting really bad really fast. So if I wanted to have an idea of like the price channel of where like this top to this is not going to work. Sorry. Here's your wedge. Okay. I'm drawing this after the fact, but the realities are still there, even if I'm drawing after the fact, that the stick holds true. And you're going to notice that the stick generally likes to sit on a trend line of some type, or on a Fibonacci level. And if you start seeing a pullback like this, you get out of the trade, take your profit and walk away, set it up again. And it's not random, okay? It's pulling back 23.6. Guess what? You can take the Fibo, okay? You can take the Fibo and do it the other way too. You can go from this top to this bottom. Here's your 61.8. Okay? Fibo rules the charts. And now you have a really good picture of why I like to put things on the wicks. But I'm losing my voice really fast. I'm actually going to end it right now because I'm losing my voice faster than I can keep it up. But thank you so much for sticking with us and hanging out and just enjoying our time together. I hope maybe some of you guys caught a trade, maybe you didn't. Maybe you saw something today that you want to pursue more, or like get in deeper. There's so many levels to trading, and just know that you're on the right track. And don't worry about don't worry about making your $100 to pay for your membership, right? Don't worry about that. Focus about learning a skill and improving yourself. It's pretty bad how bad my voice got. I'm gonna do some lemon and honey, and hopefully I'll be all right. So once again, I'm signing off. Really appreciate you guys, and we'll see you guys sooner than later. Bye for now.